Let's get to our senior economics reporter, Steve Liesman, with more reaction to today's data and how we formulate an outlook from here, Steve.
Yeah, good question, Sarah. Obviously, it's not a laughing matter. I want to just give you some details here from the ISM report. Some of the commentary that comes in along with it. Said as somebody in the computer electronics business, coronavirus is wreaking havoc on the electronics industries. Companies are delayed in starting up production. Layoffs are here, said somebody in the transportation business. Coronavirus, we will see some softness in demand, but also havoc on items sourced from China, and that may cause significant delays to production. And it goes on through there. Looking at the details of the report, I see a decline, a huge decline in imports. You would expect that. Also a decline in new export orders. Prices also came down rather sharply. In addition, you have a decline in production. Perhaps that's related to the inability to get some of the parts they need to produce. Meanwhile, expectations for aggressive intervention by central banks around the world rising faster or as fast as new case numbers for coronavirus. Say some of the things we're hearing. Multiple Fed rate cuts expected, possible emergency cuts, speculation that you may end up with a zero funds rate. Recession, however, among the economists I'm reading, not at this moment the base case. These expectations are showing up. Rather dramatic shifts in the outlook for the Fed funds rate. I had to do a double take on these numbers, guys. Just take a look at the probabilities now just for March. No chance of a 25, no chance of a 50. There is now a 99% probability of a 75 basis point cut built in for the March meeting. And obviously a lot of speculation that could even come before the March meeting. Taking a look at the trajectory now priced into the market. A full basis point, a full percentage point of a cut by July, down to 0.6 from 1.6. Goldman Sachs now sees the economic impacts extending from the supply chain to the U.S. consumer. In a commentary they wrote, in a more adverse scenario, the impacts of supply chain disruptions on U.S. producers would grow quickly, and consumption cutbacks driven by virus fears could be quite large. Expectations among economists also included expectations by global central banks, including in England, Europe, Japan, and China. And there could well be moves beyond the funds rate here from the Fed, including regulatory and supervisory relief for banks. That's speculation among economists. Less certainty about whether the fiscal side in the U.S. steps in through spending or tax relief, though many say it could be as or more effective than Fed action, Sarah.